Welcome, students. In today's lecture, we're going to treat a topic, double entry system, from the subject financial accounting. We're going to handle this topic in such a way that at the end of this lecture, you should be able to understand the meaning of double entry principle and how to make the entries, observing the principles of accounting in double entry system. Double entry system simply refers to accounting concept which stipulates that in every transaction, two parties are involved, the giver and the receiver. The giver is credited while the receiver is debited with the amount of money involved in the transaction. Let's recast it again. Double entry system refers to accounting concepts and principles that stipulate that in every transaction, two parties are involved, the giver and the receiver. The giver is credited while the receiver is debited with the amount of goods received. That is the accounting concept of double entry system. Now, we have heard of the definition. Let us look at the accounting treatments observing the double entry principle using a transaction. AA Limited supplies goods worth of 100,000 naira to BB Limited. Now, this is a transaction. You are required to open up the necessary account books observing double entry system. Now, the way forward is you now ask yourself, in this question, how many parties are involved, which is two, the AA Limited and BB Limited. Now, the next question you ask yourself is, who is the giver and who is the receiver in this transaction? AA Limited is a supplier and is a giver, and BB Limited is a receiver in this transaction. So these are the two parties involved, AA Limited and BB Limited. AA Limited is the supplier or the giver, while BB Limited is the receiver. Now the next question, the third question you're going to ask yourself in this accounting principle is, who is to be credited and who is to be debited? Then the solution to this is that AA Limited is a giver and the giver should be credited. That is accounting law. That is accounting principle. AA Limited should be what? Credited as a giver because he's a giver, while BB Limited should be debited. Then the fourth question, ask yourself again in the same question is, what amount should AA Limited be credited and what amount should BB Limited should be debited? Now you now discover that in this question, the two parties that are involved is the AA Limited and the BB Limited. AA Limited is the giver. It should be credited with the amount of the goods are supplied, which is 100,000 naira in this question. While BB Limited will be debited with the amount of what? 100,000 naira of the goods received. And the transaction is completed in this stage. At the second stage of the same question again, you ask yourself, now if BB now makes payments to the supplier for the goods supplied, let's say he makes a payment of 90,000 naira out of the 100. He makes a payment of 100,000 naira. There's 100,000 naira, he makes a payment of 90,000 naira to AA Limited. And who made the payment? The person that made the payment is a receiver, which is the BB Limited. Makes a payment of 90,000 naira to AA Limited. Now, what is accounting entry? The accounting entry is that you open up a ledger in a T form. We have the credit side and the debit side. You now, under AA Limited ledger, you credit the AA Limited with 100,000 naira of the goods supplied. Then you now go and debit the BB Limited for the goods received. Now that in the second stage, now the BB Limited makes a payment of 90,000 naira, you now go and credit BB Limited with 90,000 naira, the credit side of that 90,000 simply refers the payment he made, and is a giver. Because he's a giver, you now credit the giver. Now, when you credit the giver, then you now go to the account of the receiver now. Who now received with the payment made by BB? The person that received it is the what? AA Limited. AA Limited should be what? Debited with the amount of 90,000 naira received. Now, at the third stage, you still ask yourself, what is the balance? At the third stage, you discover that AA Limited is still having a credit balance of 10,000 naira. He's still expecting from his customer to pay. That is the BB Limited. While BB Limited is still having his own ledger, the 10,000 naira debit balance, showing that he's still in debt. He's still indebted to what? AA Limited with the amount of 10,000 naira. So this is the principle of what? Double entry in accounting. So in this illustrated example of today's lecture, you have seen how the procedure that will be observed in making the entry. I would like the student to bring their questions or their comments at the comment section, and further questions, forward it to the comment section. Thank you and God bless you. You're welcome.